Ladies and gentlemen, we have a market that defies all expectation. Let's look at the markets on the weekend review. Okay, friends, let's talk about this market that's just defying convention. Here's the market. We're going to start with the market first. Red line is the S&P 500. Purple line down here is the 200-day moving average, the way we've always been looking at it. And we have the orange line here, once again, that's the 50-day moving average. And if you remember, last time we talked, I said, well, I think we're going to have maybe a 1-month testing phase around the 50-day moving average. And then my expectation was it was actually going to release and we were going to head towards the 200-day moving average. It's not looking like that. And I'm completely fine to be wrong. And if you want me wrong in any way, you want me wrong when I say the market's going to go down and it just keeps going higher. I don't know necessarily that this is enough of a move upside to say, hey, our testing phase is over, but it's looking really strong here. Once again, just like in late April, where we were supposed to have some weakness, and February, where there was supposed to be some seasonal weakness, we just really sort of keep marching higher. This is a market that defies convention in every way. And so you might be asking, well, why is the market doing so well? And in some senses, I don't know, but in other senses, I do. So let's talk about the confusion first. So our expectations at year-end 2023, we had all of these great expectations. And if these things held, then the market was going to have a good ride. We were expecting 6 rate cuts. We were expecting disinflation to continue. We were expecting the consumer to stay strong. And we were expecting that the economic strength that we were seeing last year was going to broaden out. This was sort of like the soft landing or even the no landing scenario. And what's so interesting is if we look at reality, right, we're several months into 2024 now, and we've got a good sense for how the year is going to go. 6 rate cuts has now become maybe 1 or 2. Disinflation continuing has absolutely stopped, and now we have stubborn inflation and actually sort of heating up a little bit more. Consumer staying strong, well, we just heard from corporate earnings, and basically already in the first quarter of this year, consumers showing stress and signs of weakness. And that economic strength that was supposed to broaden out, the complete opposite is happening. Economic strength is actually narrowing. And so if you look at this picture, right, like this market, we're not getting any of our expectations. And so you would expect the market to go lower, and yet it continues to float higher. Certainly is a head scratcher, isn't it? One of the things that I have learned throughout my career is that sometimes people just want to buy stocks. And the real reason why the stock market goes up, down, or sideways is who's showing up to buy or sell on any one day. And if people are buying stocks, it doesn't matter about the expectations. It doesn't matter about corporate earnings. It doesn't matter about seasonality, tax day, or any of those things. If people want to buy stocks, the stock market's going to go higher. And that's what I think we're seeing right now. So not afraid of it, not worried about the market, continues to show amazing resiliency and strength. And so while it's here, I will welcome being wrong as the market goes higher. We'll see you next week for the news review. Enjoy your weekend. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.